What if we told you the most powerful financial force in the world isn't a bank, a hedge fund, or even a country's treasury? What if it's an entity you've probably never heard of, controlling trillions of dollars and quietly shaping the fate of nations and industries? This is the hidden world of sovereign wealth funds. They are the ultimate geopolitical players, and today we're pulling back the curtain. So, what exactly is a sovereign wealth fund, or SWF? In simple terms, it's a state-owned investment fund, a giant pool of money that a country manages for future generations. They get their money from two main sources. One, commodity revenue. Think countries like Norway or Saudi Arabia stashing away their oil and gas profits. Two, trade surpluses. Countries like China and Singapore, which export far more than they import, invest the excess cash. And we're not talking about chump change. Combined, these funds control over $11 trillion in assets. To put that in perspective, that's more than the entire economies of Japan and Germany combined. This isn't just wealth. It's economic power on a staggering scale, but here's where it gets fascinating. SWFs aren't just passive investors trying to get a good return. They are powerful instruments of geopolitics. Let's take a real-world example. During the European debt crisis, SWFs from the Gulf and Asia swept in. They bought stakes in iconic brands, critical infrastructure, and prime real estate. On one hand, they were providing much-needed capital. On the other, they were gaining enormous leverage and influence over the economic destiny of the Western world. This is the soft power play. It's not about military might. It's about financial interdependence. When a country owns a piece of your ports, your tech, and your energy supply, their interests become your interests. It's a silent, long-term strategy to secure allies, resources, and global positioning. So, how do these giants move their money without shaking the entire market? This is where their covert strategies come in. Level 1. The visible hand. This is their public equity portfolio owning shares in Apple, Google, or Amazon. They have to disclose these. But even here, they use complex, layered corporate structures and shell companies to mask the true size of their holdings until they're ready. Level 2. The private playbook. This is where the real action is. They pour billions into private equity, venture capital, and real estate. Why? Because these deals are often confidential. A fund can buy an entire skyscraper in Manhattan or fund the next big AI startup without immediate public scrutiny. They're not just buying assets, they're buying the future itself. Level 3. The black box. This is the most secretive layer. We're talking about investments in sensitive areas like cyber warfare, advanced weaponry, and dual-use technologies. Through intermediary funds and holding companies in financial havens, they can invest in projects that would be politically explosive if done directly. This is the frontier where national security and high finance blur. So, what does this all mean for the global economy? We are witnessing a historic power shift. For centuries, economic dominance was centered in the West. Today, through these funds, financial and geopolitical influence is flowing east and south. They are rewriting the rules of the game, creating a new, multipolar world where capital is the ultimate currency. The world of sovereign wealth funds is more than just finance. It's a grand narrative of ambition, strategy, and the silent reordering of global power. They are the trillion-dollar ghosts in the machine, and their decisions, made in quiet boardrooms, will shape your economic future for decades to come. What's the most surprising thing you learned about SWFs? Let me know in the comments below. I read every single one. If you want to dive deeper into the hidden forces shaping our world, smash that like button, subscribe, and hit the notification bell so you don't miss our next investigation. Thanks for watching. Until next time, stay curious.